Welcome back to Your Finance TV to look at the week ahead on what's happening in a very big week for the markets. As always, we welcome back Brendan McCarty from Column E. Welcome back, Brendan.
Good morning.
And we have a special guest this week, Matt Tuttle. How are you, Matt?
I'm doing great. Thanks for having me.
All right, before we kick off, don't forget to click on that subscribe and like button below. The numbers keep growing every week, and I think we just passed 1,500 subscribers, so thank you very much for that. All right. About 35% of companies in the S&P will report this numbers this week, including mega cap names like Google, Microsoft, Amazon, and Meta. But there is a slew of economic releases as well, including consumer confidence and new home sales on Tuesday, durable goods orders on Wednesday, and the employment cost index on Friday. Federal Reserve members are on the speaking circuit on Monday before the blackout period begins, and the House may vote on a bill that would raise the US debt limit for about a year and cut federal spending. We'll see on that one. All information that the Fed is going to keep a very close eye on. The market is telling us that we have another 25 bip rate hike coming, and that will be it. But this is not the first time that the media and big bank analysts have been pushing this story. Brendan, if the data this week doesn't meet expectations, could we see more rate hikes than the expected 25 bips?
I don't think so for the time being. I think that the Fed got fair value for the funds target's about 5.10 right now. And the stresses that we saw over the last 90 days were triggered by them going over the fair value and getting tighter than the market really wanted them to. They don't seem to, they're ignoring the 2-year as well at the moment, though maybe they aren't and just not telling you. Because if they don't ignore the 2-year, that means they're following it to some extent. I would just say this. The data would have to be astoundingly strong for them to get off of hike going, I think, another 25 after this meeting. For every 25 they're going right now, they're sending more and more people into the money market funds. And they're taking people out of the banking system, not banking system per se, but off the balance sheets of the banks into the money markets. This is causing a cash drain on the deposits. At what point does that become an issue? It became an issue for SVB. It became an issue for First Republic. It's become issues for other banks. I'm thinking that they get to 25 basis points and they sit. They would benefit themselves by continuing to drain liquidity out of the system, though. That's been a mantra. That's what I've been saying. If they would drain liquidity, then we wouldn't have wealth creation, which without the wealth creation, we don't have that demand push on inflation. Excess reserves on banks plummeted last week, which is a good thing for liquidity if you're thinking non-inflation. But we'll see. I don't think they're going to go past 25 basis points. They're talking up a good game, and it would be a good idea for them to sit and pause, let the markets catch up, let the 2-year get back over 5%, and then go from there. I don't know if they will. They're just a bunch of economists after all.
What do you think, Matt?
Yeah, so a lot of data. The PCE on Friday is the number that we're going to pay the most attention to because that's kind of the Fed's favorite inflation number. And as far as, what they're going to do when, I think 25 basis points next meeting is baked into the cake. From there on out, I think it gets really interesting because I think you've got, as Neil Kashkari said in January, you've got the same game of chicken going on between the Fed and the markets, where, the Fed is saying, hey, we're going to fight inflation. We're going to keep rates higher. We're going to raise. And the market, actually, a lot of people are expecting rate cuts this year. And the Fed's been very clear, no rate cuts this year. And you're going to see that battle continuing to play out. So, yeah, I think a lot of these numbers are going to feed into that. And, and even though you've got a quiet period, you're still probably going to have people leaking to, the Wall Street Journal Fed Whisperer. So, we'll probably hear some things out of there. So, I think that battle between the Fed and the markets, as far as, whether they actually do cut this year or not, that's going to be the most interesting thing to keep an eye on.
Okay. All right, let's move into some earnings. And with Matt on the show today, I think it makes sense to look at some ARK names, but having been the founder of the short ARK ETF. We're going to look at Roku, and they report Wednesday after the close. This is ARK's third biggest holding, and they added to their position last week, buying an additional 61,800 shares. But shares fell 10.5% after Netflix earnings last week. Does that price move? Does that move price in any potential bad news from this earnings release, or could there be even worse news coming for Roku? Let's start with you, Matt.
Yeah, so their track record of doubling up on positions ahead of earnings has, let's say, been less than stellar. And would not be surprised if this was another one that craters even more after earnings. We don't like the way the chart looks. This is one of those two. One of the things I question about ARK in kind of their research is just because a company when it came out was innovative doesn't mean that it stays innovative. And Roku is another one of those that all right, when they first came out, they were innovative. I sort of wonder, are they still? So, this is one, even with the down move we had over the past couple of days, I wouldn't be playing around on this one before earnings.
How about you, Brendan? What do you think on Roku?
Oh, what was the old saying? When the U.S. caught a cold, the rest of the world would get the flu. Is that what the old phrase was?
Yeah.
I think Roku caught the flu last week with Netflix because sub growth came in lighter with Netflix than the market was looking for. And Roku suffered as a result of it. That plus the chart doesn't look great. I don't. This is this generation's cable box. I have an Xfinity box I'm staring at. I have a Roku box staring next to it. They both do the same thing. I don't see what's so great about Roku, to be honest. I mean, I understand it gives you easier access to the streaming options, but as I've been saying over the last I've been saying for a while now, I think streaming is mature. I think it's saturated. I think that you're seeing a lot of these names all they're consolidating. If anything, they're not expanding. Disney can't get rid of ESPN, even though it wants to. Roku is a beneficiary of that. So when the market's growing, it's like at the beginning, like Matt said, when it was innovative at the very beginning, when streaming was like shooting to the moon, Roku benefited. And now we're seeing the other side of that. And I don't know. I have a cable box that has ads. Why do I want another one that has ads? I guess with Roku. And one of the compelling things for owning Roku is their own Roku channel. That's what Bloomberg was saying. Well, I mean, I looked at the Roku channel last night, which I've never looked at. I've had this Roku box for 2 years. There's nothing on it. I mean, I don't know. I mean, if you're gonna watch some stuff, I'd go turn on Netflix and I'll catch this stuff. But it's garbage. It's stuff that nobody watches anymore. And I don't know how the margins are 35% of there. So long story short, they're not profitable if I'm not mistaken either. So I don't know. Is it buying this ageless cable box the key to success for long-term growth? I don't know. I mean, Roku, I think the market's sort of giving up on the story. I think that's why the chart continues to move lower. And ARK buying it seems to be the kiss of death these days. It's just not I mean, I've never been a Cathie Wood fan. I didn't even know SARK existed. I didn't like Cathie Wood. And it was like, I'm like, this is the perfect instrument for it. But there's a time and place to buy ahead of earnings. This is not one of them.
If they got this show on Roku TV, I would change my mind. But without it, forget it.
Hey, we should get our own streaming channel. That will get their numbers up.
All right, let's move on to Teladoc then. And they also report Wednesday after the close. It's ARK's 10th biggest holding. They had positive news last week that they are expanding into a provider-based care for weight management and pre-diabetes programs. But that won't begin until the third quarter. Could the rally on the back of that news be wiped out with a miss here? Expectations are for a loss of 51 cents per share, and there have been revisions lower by analysts going into these numbers. I don't see any analysts with a sell recommendation on this one, but consensus is a hold recommendation. The stock has been range bound for quite a while now. Could we see a breakout one way or another from these numbers? Brendan, let's start with you this time.
So I've always been a fan of Teladoc. I don't know why. I mean, I've always liked technology, but I like the idea of it. I thought that when I was trading Teladoc days at Morgan Stanley, and I thought the world would be its oyster, so to speak. I thought that they would keep advancing their tech, but it's like they haven't. I mean, they're just doing, like, Better Health is one of their instruments. I didn't realize Better Health was one of theirs, but Better Health, and a couple others, they just don't seem to have, I don't know, they're not, I mean, they're not really growing. I mean, it's just, they're losing money. I feel like they should be doing more. I think that's what it comes down to. And if you were to read the research this weekend over these guys, you would find that everybody seems to be thinking the same thing. Like, where's the next big thing? I mean, they're growing at certain levels, but then, I mean, revenue grows at 10%. Healthcare is a sector that they should be taking over. They should be doing much better in. Mental health is a big deal these days. They're in that sector, but they're not really growing much from it. The stock did bounce though. This is, like, I think it's 3 times off of a support level, around 23, I guess I'm not mistaken, but it hasn't really advanced much from it, which argues that, those are dead cat bounces more than anything, and it needs to find the next catalyst to get it moving. I just don't see it. Maybe I'm one of these guys, like, I'm thinking, it's a show me situation. That's what it comes down to. Show me your next growth. If you don't, you're just another company losing money. And that 23 level might be vanquished quickly if they don't start making money.
Well, Matt, there's another question thrown into you in this one. Like, if there's no sells on this stock, should there be a sell on the stock?
So, assuming that Wall Street analysts weren't conflicted, and assuming that Wall Street analysts actually knew what they were talking about, yes. Given that neither of those things are true, I put zero stock into that. Because what you'll see, if Teladoc announces awful earnings and they tank, then you'll see all of those buys. XYZ brokerage firm that had Teladoc at a strong buy now, downgrades them to a sell after they tank. So, to me, Wall Street analysts are zero help. I pay no attention to what the analysts are saying. And I agree, I think, with Brendan a lot on this one. The idea of Teladoc is interesting. I mean, I have now gotten used to not having to leave my house. I mean, I can't remember the last time I went to the grocery store. Technology is making it very easy for me to be lazy. And I love that. And, the idea of, hey, I don't have to make an appointment, wait in a waiting room. I can just be, like, on a call like this with a doctor. That idea is amazing, but, they haven't been able to deliver. The chart's a mess. Could they pop on earnings? Yeah. But I mean, looking at that chart, that's not a name I want to be involved in.
Okay. I sort of agree on that one as well. So I feel like there's competition in the space as well. But all right, let's move on to the next one. I hadn't really done a lot of work on this one before. I was actually quite impressed with it. The symbol is ACCD, Accolade. They report Thursday after the close. Now, whilst it isn't the biggest holding with ARK, it's the 32nd biggest one. Like Teladoc and Roku, ARK is the biggest shareholder of Accolade. Analysts like this name, and with Wells Fargo raising its price target last week and Stevens initiating coverage with an overweight recommendation and a street high target of $18 price target a couple of weeks ago, there is obviously a lot of love for this name. A combination of technology and healthcare is a recipe for success at the moment, and Accolade is up more than 105% year to date. Is this a case of the trend being your friend, or rallying too hard too quick? Matt, start with you.
So this is one of those where context really matters. If we're in a raging bull market, then the trend is your friend, and stocks like this, yeah, you want to buy into. Where we are right now, and again, I mean, no one's got a crystal ball, but I've been watching, the S&P kind of bop back and forth between, moving up to 4,200 in the high end and 3,800 on the low end. And you've been rewarded by basically fading it when it gets up at these levels and buying when it gets down lower. Where we are on the S&P near 4,200, I personally would not be buying stocks that have gone up this high, this far, this fast. I don't like the risk reward, because I think that, I would be fading things to the downside right now. Not hard, but I'd be looking more for shorting, and I would not be, buying stocks that have taken off like this.
What about you, Brendan? What do you think about Accolade?
It's an interesting company. It's like the Salesforce of healthcare in a way. Like they try to create a CRM for you to navigate healthcare. And it's funny, I can navigate the financial world, but I cannot navigate healthcare. Like finding a doctor for my daughter or referral, all that nonsense. I just can't figure it out. These folks are trying to, it sounds like, try to put all that together, make it easier for you. But that business is incredibly hard to navigate. It's incredibly governed by the regulatory authorities. Like you got HIPAA, you have all sorts of different things. Like we were just talking about Teladoc being more. Like these folks could be more. I mean, they like water seeping into cracks. They're like moving in different parts of the healthcare, but they're only growing revenues at 30%. So how fast are they really growing is the question. Like they're not growing. Healthcare is ripe for the taking in terms of being organized, but it's just too many players. It's like insurance, every state's different. Healthcare is the same way. My wife works in healthcare, and she spends a lot of time working at that stuff, so it's hard. For ACCD, the chart, it's been a trend fall. It's been rising. Breath has supported it. But going into earnings, they've missed 5 of the last 8 times on the income number. But they've beat 8 of 8 times in revenue. So they're being a growth stock, but they're only growing at about 30%. So I don't know. We're in an environment where nothing's growing, so I suppose that's better than nothing. But I don't know. It's a stock that, the chart does look good. I can see why people are chasing it. We're in a momentum world these days. Nobody seems to want to go against a trend from time to time. Institutions seem to be jumping into this. But at a recent conference, they were not super optimistic about earnings. So it's a fascinating company. Again, ARK's on top of it. And I go back to Teladoc. They're not really growing, and they're focusing on margins. What makes them a growth stock anymore? These guys are growing at 30% a year, but not growing earnings too much. Is that really a growth stock? I don't know. Tough one. So I would just say that, yes, the chart looks good, but there's a lot of risk going into earnings with these folks. They seem to miss earnings more often than not.
Good point. All right, let's break away from Cathie. And let's move into 2 names I want to look at. GE and Boeing. They're both reporting this week. GE on Tuesday morning and Boeing on Wednesday morning. Both companies have had their respective issues. GE essentially clearing the deck and getting rid of assets they didn't see profitable going ahead. And Boeing with its plane issues, and also saying that they're going to ramp up production, and then the following week saying that they're having issues. That's probably a conversation to have with management. But 2023 has been a tale of 2 different stories with its share prices. While Boeing's share price has performed well, up 7.7% year to date, GE is up 52.2% year to date and was touching triple figures last week. Gentlemen, who would you rather own going into the rest of 2023? The plane builder or the maker of the plane's engines? Why don't we start with you, Brendan?
So I'm gonna go with GE on this, and I was looking at a ratio of GE versus Boeing since 2000. It paid you to own Boeing for that whole period, all the way down. And GE has had false starts here and there, and it finally got above a trend line this year. I think I'm being a little. Normally I would say it's the perfect point to short GE and buy Boeing. Because it's hit this trend line before, and it's a moving average. I think it's like 13-month moving average or something. I can't remember what number I was looking at, but it seems to hit this moving average, and it's an inflection point. So in the late 90s, when GE was rip-roaring strong and Boeing was just what it was like lagging behind, Boeing would use this trend line and explode higher. I'm sorry, GE would use this trend line, explode higher, and Boeing would watch. Since 2000, when GE's whole bubble burst, literally with the bubble in the stock market, GE also burst. Boeing's been a better play. So we now, in the next 20 years, where GE is better than Boeing. Boeing's got its own problems in terms of you can't trust management. They're always making mistakes. They always overpromise and underdeliver. It's been a constant theme. They're having trouble again with the MAX, and GE services both. So will the losses from less planes coming out of Boeing hurt GE? be offset by the rise in Airbus. And I would go with GE. It's just the chart looks like it could be starting to make a longer term run higher. Plus, I just don't trust the management of Boeing. I mean, that guy I can't remember what his name is, but he literally came in championing the company, I don't know, it was 4 or 5 months ago. And then the stock went straight up. And then here we are again, max problems. I know you didn't see it 4 or 5 months ago. I don't know.
All right, Matt, what do you think about GE and Boeing?
So I'll take the other side of that argument. Both stocks are kind of favorites of Jim Cramer to talk about. GE, he's been very positive on, which right off the bat, makes me negative, and we're short that name in SGIM. Boeing, he had an interesting flip-flop where he came out positive on Boeing, then 5 minutes later, all the issues came out and it went down, and now he's negative on it. So we're along Boeing and SGIM, and I agree with both of those positions. I think GE's extended. I think you've seen a massive flight to safety trade this year into mega cap tech, into consumer staples. GE doesn't fit into, either one of those, but it's still a stock that you think of as, a stodgy or safer stock. So, I'd look to fade that move. Boeing, a little bit risky here. It's kind of been locked in a trading range for a while. It could go in either direction, but if I had to choose one ahead of earnings, I'd choose Boeing.
Okay. All right. Well, let's move into the last segment of the show. Like it, love it, leave it. And funny enough, we're sticking with the earnings theme. All right, Matt, you know how it goes. Brendan, you obviously know how it goes. So let's just jump straight into it. Verizon, they report Tuesday pre-market. Start with you, Brendan.
I'd leave it. Had nasty reversal on T's earnings. Really left support behind. So it's going, I'd leave it.
All right, what do you think, Matt?
I'd leave it. That's been an awful stock. I don't think it'll be anything more than an awful stock.
Next is McDonald's. They report Tuesday pre-market. Matt, your turn.
I would leave it. I think you've seen the flight to safety into consumer staples. I think these things have gone too far too fast.
Brendan?
So I would normally agree, but I think this is one of those few stocks that is climbing in a parabolic fashion. You haven't seen this in a long time. So I would ride it. I like it. It's overbought, no doubt, but it's climbing range by range. And it looks like it can continue to higher.
Okay. Big one, Microsoft, Tuesday after the close. Brendan, your turn.
I'd leave it. 290 to 300 is a tough range to break through, and it seems they're having lots of problems with it. Looks like it's reversing below it.
Okay, Matt?
I would leave it. Again, flight to safety into these mega cap techs. I'd fade it.
Okay. Google. This will be an interesting one. They have Tuesday after the close as well. Matt?
Same thing. Mega cap tech, flight to safety. I would leave it.
Brendan?
Leave it. It fell below the 65-week and a range at 107. It seems to be in one gigantic range.
We're all on mega caps here. Meta, they're Wednesday after the close. Brendan?
It's in no man's land, so it's sort of like a coin flip, but I would like it. 210 and 220 is like no man's land. Fell below the bottom and finished higher last week, so I'm thinking maybe it goes to the top of 220.
Okay, Matt?
Kramer's second favorite stock. I'd leave it.
All right. And then the last one we're looking at is Amazon. Matt?
So this is the only mega cap tech that doesn't look way extended. If I were to buy any of them, this is the one I would buy.
Okay. And then Brendan?
So I like it, and it falls into that 2020 theme where the consumer was buying right out of the pandemic. Those who had money were buying. So I like it. I think it's going higher.
All right, great. Well, listen, gentlemen, thank you so much today. For the viewers out there, don't forget Matt's ETFs, long Jim, short Jim ETFs. Brendan, column E, you can go check them out. Gentlemen, you have a fantastic week and good luck with all these trades.
Thanks, you too.
And for everyone else out there, good luck investing.